Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the high time frame with the bearish scenario, where we are looking for a three-wave corrective structure to the upside in a zigzag, after which we then expect much lower prices to come. In this scenario, wave B retraced to the 382 Fibonacci, which is taken from the low to the high of wave A, and it is a common target for a wave B, but a less common target for a wave 2, which does increase the probabilities a little bit that this move to the upside can be a wave C. The most common target for a wave C is between the 1 and the 1.236, with the less common target, but the target nonetheless, being the 1.618, taken from the low to the high of A to the low of B, which gives us a target area between 40.4k and 50k. However, this is your target area on the linear scale. If I put the chart on log scale, then you can see that the targets are much higher. Your most common target area is now between 50k and 59k. So even if C would move to the upside inside this area, there's still the probability of price moving to the downside and this bearish scenario playing out. However, what is not nice on the logarithmic chart is that wave B did not touch the 0.382, because the common targets for a wave B are the 382 to the 886. So not hitting the 382 is less common or rare for a wave B, which lowers the probabilities of this zigzag on the logarithmic scale, increasing the probabilities of this zigzag on the linear scale. So if price is going to move above 50k to 54k, for example, it would increase probabilities for the more bullish scenarios coming up next. So then the question is, could this be the high already? And are we going to move to much lower prices? Now let's zoom in to this latest structure to the upside here, where we are then counting a 5-wave impulsive move in a 1, 2, 3, 4, 5, with inside wave 5 an expanding diagonal. Now, an expanding diagonal in general is a rare structure and never has the highest probabilities unless all the other scenarios fail. So this lowers the probabilities of this being the high. However, it's not only an expanding diagonal here that lowers the probabilities of the high being in. It is also the first structure to the downside. If we are looking for a higher degree wave C to be in, and we look for much lower prices to come, right, then we want to start the move with an impulse, a 5-wave structure to the downside. It is, however, very, very rare to have a truncated impulse where wave 5 does not end below the low of wave 3, where you have a 1, 2, 3, 4, 5. Very, very rare that this happens. And if you then combine the probabilities of an ending expanding diagonal, which is already rare, in combination with the first move down being a truncated wave 1, right? In a bigger wave 1, you have a truncated wave 5, so a truncated wave 1. The probabilities for this scenario are very low, and therefore the probabilities are low for this to be the actual high of the uptrend that we have. If we then zoom out once more and look at the bullish scenarios, then here we have the same count, but wave 5 is not yet in. So we have a 1, 2, 3, sideways 4, and then we're looking for a wave 5 to the upside. Your most common target can be seen here between 46.1k and 52.2k. In this scenario, preferably the low of your wave 4 is in, and you're going to be looking for continuation to the upside. The 0.236 is a common target for a wave 4 as well, taken from the low of wave 2 to the high of wave 3. Time-wise, however, this wave 4 is very long, so if it comes down once more, then the low of this wave 4 is going to be between the 5 and the 6 fib time. And this is a fib time that I have taken from the high of 1 to the low of 2 and put on top of the high of 3 to combine or to compare the time of wave 2 with the time it takes to develop wave 4. It's absolutely normal for a wave 4 to be 1, 2, 3, maybe 4 times longer than a wave 2, but 5 is already stretching it, and 6 is really low probability. So preferably in this scenario, the low is in, and you're going to be looking for price to move towards the upside, towards that 50k level. However, if price is going to continue ranging here for much longer and we don't see the impulsivity that we want to see for wave 5, as we are looking for an impulsive structure to the upside, it increases probabilities for this scenario here. in this scenario, we are looking for a bigger impulse to the upside in a wave 1, 2, 3, longer sideways 4, and then a wave 5 to the upside. In this scenario, we would then have a finished wave 3, with either wave 5 being finished on the left or on the right. That does not really matter for this scenario, so I might as well remove this. We are looking for a high of wave 3 here, and then we are looking for a wave 4 to the downside, right? In this scenario, preferably, the low of this wave 4 is made after the 0.382 fib time, taken from the high to the low and then put on top of the high of 3, which is now for me over here as it stands, which then gives us a target after the 31st of January. Reason being that this wave 2 was very shallow and very long, so a wave 4 can be more deep and short, and this would be a short target. And also usually the relationship between 2 and 4 is at least the 0.382, usually even longer, but the 382 would be a minimum for me. The common target area for wave 4 over here is between 40k and 34.8k, with the invalidation, the 0.618, at 32.4k. And in this scenario, I would then be looking for a bigger sideways structure, so more ranging to come at the beginning of 2024, but it does depend on the time it takes for this range, because again, if we continue ranging here for a lot longer, the probabilities increase for this scenario here, which of course would then be bullish, as this would then result in this high time frame scenario, right? This is basically the same scenario, but then we are looking for this 1, 2, 3, 4, 5, right? The same as the yellow count just now to finish a wave 1. Now, if I then open the volume profile of the range of 2022 as well and actually switch to the weekly time frame, then what you can see is that this scenario will work very nicely with the volume profile. We have ranged here for a very long time, and I think the probabilities are very low for price to just continue and never look back. I think the probabilities here are much higher from an Elliott wave as well as a volume ranging point of view, that you at least spend some time in between the 50k and 30k area in 2024. In this scenario, we then have that 4 and 5 that I just spoke about could end around that 50k area, let's say between 48, 53k, right? And then we're going to be looking for a retracement to the downside for that potential wave 2. After moving inside this value area, we also never retested the low here. We had support, support, resistance, 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 but once we broke through, we never actually tested it as support. So it could be very interesting to look for this range in 2024, potential buy opportunity, of course, no financial advice, and then be looking for continuation to the upside. If we look at the more local range, the range that we've been in for the past, well, couple of days, almost couple of weeks now, we are just ranging, right? Range up, down, bit of a deviation, moving down. Low of the range was holding, moving back up. Currently, the high of the range is holding. We are now grinding against this white box over here, which is acting as resistance. Locally, we did find a bit of a push to the upside. We hit the value area high as well as the white box resistance, found our way back to the point of control. Now, in this scenario, if price can move above this white box once more, which is sitting between 44k and 44.4k, and actually find support here, probabilities are high to move towards the upside and look for that yearly level at 46.2k or higher prices. Price losing the point of control and entering the area of this wick, however, would be more bearish, as then the probabilities would increase to look for the value area low and then eventually the box below and potentially fail this wick that we have as well. Now, we do have some news today as well, so make sure you trade safe. 2:30 p.m. Central European time, right? Volatility might increase, red flags over here, so it's important. So make sure that around these hours you trade safe. And if we then finally look at the probabilities of the different scenarios, then on the high time frame and the medium time frame, probabilities are still very, very high that we are going to see higher prices and that this high is going to be taken. Reason being, an expanding ending diagonal for a wave 5 is very, very rare, especially in combination with then a move to the downside where you have a truncated wave 5 in an impulse in your wave 1, really lowers the probabilities for this scenario compared to the more bullish scenarios where we are looking for a 4 and a 5 up, or we are looking for a continuation of the range where a bit more downside is expected. That's no problem, but eventually we are looking for this high to be taken. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.